Hey, it's George from Triangulated back with another edition of Listen to the Market. So, over the weekend, as you probably all already know, we got the news that the U.S. and Israel coordinated an attack on Iran, and that caused some fireworks in the market. So, what was kind of a dull week last week has given way to an exciting one now. Okay, this is first chart here today is USO, which is oil. Not a huge surprise. It spiked up a ton. Anytime that there's big trouble, big happenings in the Middle East, oil tends to go higher. And gold went up a bit too. So it looks like the sort of fear for energy availability meets concern in general trade is on. In stock sectors, similarly, we see that the oil and gas equipment services are one of the top performing sectors of the year. This is year to date so far. And same goes for XLE, which is the broad energy sector ETF. Not surprisingly, part two, the aerospace and defense sector is also among the strongest year to date. So it's really not a surprise that these things move. But what is kind of a surprise is go back and look at the oil and gas equipment and services ETF. This move didn't happen. Okay, let's look at oil first. So oil was moving up and then it just spiked up massively. But look at the oil and gas services. I mean, this was already moving ahead of the news. Same goes for XLE. Same basically goes for aerospace and defense. These stocks had their moves earlier, which leads me to wonder, did somebody know? It sure looks like it. The old kind of idea is you should listen to the markets. That's sort of the reason I named this podcast or whatever you want to call it what it is, because the markets will tell you things. And it sure looks like, with the benefit of hindsight, the energy stocks in the U.S. and the aerospace and defense stocks told us that something was going to go down. Now, obviously, hindsight's 2020, but I always like to take notice when I see this, because I think when you see stuff like this, it gives me more faith in listening to what the markets are saying and trying to interpret them. Okay, what else? So bonds jumped up a bit on the back of the news, but they've come back in. So presumably things are not as red alert as they were a few days ago. Similarly, the S&P started to sell off, and it actually broke the bottom of this multi-month range, but it's coming back in for now. This continues to me to look more and more like one of those Nicholas Darvis boxes. If you don't know what I'm talking about, look up Nicholas Darvis. He was a trader from the 1950s, 60s, 70s era, and he had these boxes, and he would basically, which are channels essentially in modern terms, but he would watch the boxes, and when something broke out of the boxes, he would take a trade in the direction of the breakout, which is similar to Livermore's method. So anyway, for now that breakdown didn't really happen, but it's interesting. We've been in a pretty tight channel for several months now. We'll see which way it goes. When you consider Iran, the fact that these AI stocks, the Mag 7 stocks, are not doing very well despite very positive news, which I've talked about in various recent videos, and everything else going on, it sure looks like the stock market is just not sure what's to come. So time will tell. The long-term trend in stocks in the S&P remains up, but some of the faster trends are starting to shift to defense mode. And accordingly, my tactical models are actually starting to increase allocations to cash, depending on which model specifically. It can be somewhere from a third to just shy of half in cash. But to me, it doesn't feel terrible to have things going to more cash, considering everything going on and how the markets are sort of the uptrend has stalled for the moment. Time will tell, but yeah, it doesn't feel like playing defense is the worst thing in the world to me at the moment. So that's it for this week. We'll see what next week brings. Thanks for watching. See you next week.